Down 600 on Monday, okay, Christmas, up 1,100 yesterday. Looks like we're going to lose 400 again today. What the heck is going on?
It's waste of a clean shirt day today. I got to tell you, because markets are so illiquid right now. We're completing this sell-off in the market, and I do believe that we are bottoming. And the bottoming process is exactly like you're seeing right now. Lots of volatility. We're right at the end of the year, so investors can continue to take tax losses right up to the end of the year. And I just think once you clear things out, we'll have a better look back in January. I do see when fundamentals don't work, you have to rely on the technicals. I mean, last couple of days, Friday and Monday were almost record days in the put-call ratio and new lows on the S&P 500, new 52-week lows. That's just get me out of everything. Anything that's glued to the wall.
Well, what was yesterday? Get me into everything?
Well, at some point you just run out of stuff to sell, and it's not a lot of buying that lifts things up. You just run out of inventory to sell. This is you get these huge snapbacks, and then pullbacks off the snapbacks, and we'll see where we are. As you've said, you don't know where we're going to be in a couple of hours when the market actually opens up anyway.
And it's an important point you're making, because the one thing, and by the way, even with yesterday's gains, the biggest point gain of all time, great percentage gain, it's still the worst December for the Dow since 1931. So nothing has changed there. Here's what I've heard from everybody that we've talked to. It sounds like you're confirming it, which is it's not as much people wanting to sell as much as simply no buyers. So if I'm trying to sell you something, 50 bucks, okay, how about 49? 48? 47? 46? And that's what's happening. And there's no buyer in there to step in.
And you're not price sensitive, because if you're looking to square off a position
just
or take
dump
a tax,
get rid of it.
Just get rid of it. Exactly right. That's what happens. Look, we've had several of these kind of 15% plus types of corrections. 8 of them since 1946. 8 of them did not result in a recession. The granddaddy of them all was the 1987 crash. Those of us who were around then remember that there was a new Fed chairman back then, a fellow called Alan Greenspan, who was appointed
untested
in August.
Young buck.
Untested young buck. He kind of turned the tightening screws maybe one too many times, and which probably was a contributing factor to the crash. Then it was called portfolio insurance that contributed to it. Today, it's ETFs, algorithmic trading, all these different kinds of trading strategies. There'll be an autopsy on this sell-off just like every other one.
But I guess I worry when we have I know the numbers have gotten bigger. We have a great audience, right? Very smart. Right. So they say, well, of course the numbers get bigger, things go up. I get it. But you get 650 points down on whatever it was on Monday. Then you got 1,100 points up yesterday. Now it looks like we're going to fall 400. That's a weird market. I've been doing this long enough to say that.
Yeah,
who's in charge?
That's a good question. There's always regime change of who's in charge. I will tell you who's not around are the fundamental buyers and sellers right now, and that's somewhat seasonal right now. There's always a battle between the man and machines, and I just think right now man's on vacation and machines taking over for a little bit.
Yeah, there are. Obviously there's less volume, which means more volatility during this kind of a holiday week as well. Yeah. But for people at home, they see these wild market swings. And I'm going on the Today Show later this morning to talk about these wild market swings.
Right.
What do we tell them to give them comfort that it is sort of, you're going to hear this, Jumana said it, the sea of red. There's going to be a lot of ocean analogies today. Yes. Is it safe to go back in the water, so to speak?
So, Brian, it depends what your outlook is. I'm confident telling you that a year from today, you and I are going to be talking and stocks are going to be 15, 20% higher than
they are right now.
Than they are right now.